We have today three sessions completed as of I'm recording this session. And if you have still not looked into how we have done on day 1, day 2, and day 3, you can go to my YouTube channel and you can review that. Just search Alpha Crypto Trader and you'll get the link of all my both videos on my channel. All right, so review what's in the table today. So we are going to show you how we have done overnight. That's our first agenda. The second thing which we are going to talk about is how we can handle large crashes in the market, which has happened yesterday, about 10% crash after Elon Musk tweeted that he's not going to use Bitcoin since it uses a lot of electricity. So it was a pretty scary moment in the market where we have seen a lot of sell-off coming through, about 10 to 11% down Bitcoin from the opening day. But so we will be looking at how to utilize these opportunities when they come up, and how to look for the right spot to buy when market crashes, right? Everybody wants to know that. So we will reveal that secret today. We will go through all our trades of what has happened today as well, and we will also show you around our P&L graph to look into how our growth is going on. We have a target of about 3,000% return this year. So we will look at it and we'll see where we are heading towards it, right? So let's just start the review of today's trades. We had, if you see my screen here, we had one trade spilling over. So yesterday I took a long position on EOS, and that got spilled over to today. So just ignore this one here. It was a good profit though, but I'll not be reviewing that anyway. We have a lot to review for just for today. So if you look at Shiba, right, SHIB token, sorry. So SHIB token is recently listed on Binance, and its futures contract is known as 1000 SHIB USDT, right? So we have taken a long position here at 554. So somewhere here, right? So we looked into it, the pattern. It has crossed it. It has not came back. It has touched the high. It has reversed. So we have taken a buy here, and then after that we waited for about 6.4, right? So this was somewhere around 6.4. Yeah. So this was the place where we have placed an order, and we got exited. Since the rest of the market's view at this point in time was not that much bullish, we took an exit from this particular trade with some profit. So we bought it not 173, and we came out at not 176. Then let's review the second one, which is Cardano's ADA. So ADA trade is still going on. If you see, we bought ADA at about 726. So let's go to ADA, Cardano's perpetual. We had an entry on the Cardano's at 726, which is somewhere around here, right? So we bought Cardano's here. It has made some decent highs. If you see here, the position is still on here. We have still not exited the position. The size of the position, if you look at it, is smaller than the actual balance here, which indicates the kind of confidence which we have on this trade. So even if this goes down, this will hurt us very little. Algorithm will decide when to exit, by the way, so I'm not gonna interfere that. So let's come back to that. So ADA is still going on. We have little bit amount of profit, about $7 profit on that trade, on top of the size of 703 or ish. So we are about 10% up in it. Then you have then you have a dot setup. So this was a dot trade. Let's see how this went. So this was a pretty chilly one, right? So where we sold it, let me pull up the dot chart. Polkadot. All right. So this is Polkadot. Polkadot had a entry on a sell entry on at about 829, and if you look at it, it was a very quick trade. It was a very quick trade. So we looked at it at 829, right, and we shorted it, which was somewhere around here. We had a small profit. Okay, we had a small profit, and then we sensed the volume and the patterns in the market. We sensed that the short might not become reality, and we exited this trade. This particular setup has a very thin depth. So if you look at here, right, so depth was not that good, and at that point in time, and that has hurt us a little bit. So if you see, we sold it at 39.378, and we had to buy back at 39.599. I do know that if I would have waited, I would have got out with a decent profit, since this particular position was about 14,000 in size. It was a big size position. But I did not want it to risk it, since this particular view was in a mode to break out. So if this would have broken out of here, it would have been a disastrous situation. So that's why we immediately got the sense of the market, which was about turning bullish. And you can look at it, right? It has not fallen down since then. So the view was right, and we took a small hit, and we exited that particular position. So we had about $70 ish loss if you calculate it from here. Then we had a EOS trade. EOS was pretty good one. So if you see, we shorted it at 10.3, and we bought it at 10.2. The short trade was also about somewhere about an hour long. And so let's also look at the EOS. USDT perpetual futures, if you look at it, we shorted about 846. So our short position happened somewhere around here, right? 846. So somewhere around this zone. And then we had a small pullback. And we were hoping that it would not touch or cross this particular layer. That it basically signifies whether there is a weakness or not. The difference between this setup, and if this would have came above here, right, touched this particular 2 standard deviation here, the normal standard deviation, this means that you have a formation of a higher high. Look at this bottom, and if this would have touched this, that means you have a formation which is bullish. And whenever you have a short trade, and whenever you see it's bullish, it is turned bullish, it's time that you should look for a right entry. You might be lucky that market comes down, but don't be too greedy. Just look to cut with a small loss and get out of that trade. It might become a disastrous one. You might not even able to get out. That's what happened on the Doge setup today. So I'll show you how we manage the risk on the Doge. And Dogecoin actually went up quite a lot just immediately. So let's look at it, right? So we had a good trade here. We sold it at 10.03, and then we got to buy back it when it crashed down. And yeah, somewhere about here, we booked our profit and we came back. So somewhere about $100 profit on this one, if you look at the position sizing and the exit price. Again, EOS had a gap on the depth, not too much, but it was a little bit there. So I had to key in the large number, which was 10.3, and it got filled in pretty sweet deal. It's like 10.272. So this was our EOS setup. Let's go to the Doge. Man, it was crazy. It was a crazy hell of a ride, right? So look at this. So we got a shot on Doge, and that particular setup happened at, I think we had a one Doge position which was coming from yesterday. One second. So to be honest and fair, yeah, there you go, there you go. So we shorted Doge. Let me show you what has happened. This was an interesting hell of a ride. My God, it was a mind-blowing one. So we don't hesitate to take trades, no matter whether it's what, or we don't care about that. So if it is a setup, if we find it, we're gonna shoot it. It's simple. So we had a setup, sweet setup, at 1050. Okay. So if you come here, right, at about 1050 on, I'm sorry, this was about on 12th. Yeah. So 1050, somewhere around here. So this was the neutral position, if you see, right? Market, this is what I'm going to teach you today. Market fell off, it came down to a neutral. Now, do you know what's going to happen? You don't know, right? But we know. Our algorithm was pretty clear this is going to be a fall. And we shorted it, right? We did not put too much money. We just put half of it. So we had about $1,000 account. So out of it, we just put about $500 in it. And we shorted it. Now, if you look at it, it was on a very, very sweet profit. When I looked at this trade, I was very happy. Look at this. Amazing trade, right? It was just keep crushing. It created a new low here. But the problem was on the exit. We thought we did not had a right and exit here. Okay. So look at this. The first exit which has happened, the last exit which has happened is happened at 17.2. Okay, which is somewhere about here. Now, who the hell in their right minds can handle this? This is a pretty explosive trade, right? But we did handle it, right? We handled it like pros. So if you see here, right, we had a good profit. We did not booked it. We kept riding along. And then a moment came at 4 o'clock. So if you look at what happened at 4 o'clock, man, this is massive. Okay, a trade which was running somewhere around 43 cents has gone up to about 52 cents. Okay, but this is the place where the big but happens. Okay, so if you look at my sizing, I only put about $500. So this particular move is reduced in half in terms of the impact to my account because my position is half. Okay, so it's not hurting me. And since I found that the standard deviation model is recommended that we can do a second entry, a heavy entry here, for the sake of a good exit, okay, we shorted this right here. Look at this. So we shorted at 16.05, right? So 16.05 would be somewhere around here. And the price which we got is about 58, yeah, so 50 and somewhere about, there you go. So we shorted it at this price. And look at the quantity. This quantity was 10 times more than what quantity I have put in place before. Okay? Now, so this was a $6,000 size of the position. Now, if I would have used all my gunpowder on the first trade, it would have been a disastrous situation right now. By now, my account would have got liquidated even, right? So we saved our gunpowder and we shot it when we had the right moment. Here, we took our first profit in another 10 minutes. Okay, so 16:30, this first crash, which came back to the normal-ish, we took a profit, a decent profit of the extra amount which we have put in place, right? We only booked a profit of about $5,900, and we left somewhere about few dollars in it. And then we closed the remaining positions at 5 p.m., right? 5:02 p.m. So 17:2, right? That's somewhere about here. Okay, so we closed some about our second position and complete position somewhere here, and we ended up making some money. Okay, this was a money making deal. Since I averaged it out and I exited, and why I was able to average out, because my initial position size was a small, and believe me, this was a sweet deal. A crash from 44 to 37, people dream of it in Dogecoin, because that's a big deal, big chunk of profit. But again, you have to look at the risk and you have to size your position based on the risk. And this is where mathematical model comes into the picture, which we use to identify, right? How much amount of leverage I should be using, whether I should be using less money, even, look at that, my account was about $1,000 and I've only used $500. Why? Because this asset, the Dogecoin, is crazy asset, right? It goes nuts sometimes whenever it finds a right moment. It just goes boom. Look at this. It just bam, man. This is crazy move, right? So the lessons which we've learned today is that initial position sizing should be according to the behavior of the asset. If we see that asset is highly fluctuating, and if your intention is that you're going to keep this particular position a little longer, use a smaller size, okay? So that if it goes beyond your capacity, you can still, once it is beyond a standard deviation, once the value is highly exaggerated, you take one moment, okay? Not you can't stay longer here, right? You take one moment when a spike happens, you run your average trade, and the moment it corrects and you come even at a cent of profit. We had a decent profit here. We had about $100 profit here. But let's say even if you come back to the decent profit, or sorry, small profit, you get out because your trade has been blown off and you are still lucky that you are making money out of it, okay? This can only happen in the crypto market. People in the stock market and bond market will get fried and toasted here, okay? So so that's our review for all the trades which we have executed. We have one trade going on, which is on Cardano's. If you look at ADA is doing good, and then based on that, we will figure it out how we gonna take it up. By looking at the pattern though, it's a little bit of bearish, so I would not be surprised if Algo closes this particular position by taking some profit. But I'll let algorithm do its decision. I'm not gonna interfere in it. Now, coming to the second point of how we identify the right spot to buy when a market crashes, right? That's our learning zone. So I'm going to show you a very secret method and a very effective one which I use, okay? So normally what we do is we look at the market in terms of the waves, what type of waves are coming through. Whenever a correction happens, that correction happens in 3 waves, and until unless those 3 waves are not happening, you don't take a contrary move. When I say contrary move, that means obviously when, let's say this is Cardano's, when Cardano's is crashing down, you want to buy because the value is cheap. You don't want to sell here because, you will get wiped out the moment it even moves a little bit back up, right? So in the Bollinger Band, if you see that it's the trade is exaggerated, you need to count it how many times it is exaggerated. So this is the first time when this got crashed, right? This is the second time when this got crashed, and this is the third time when it got crashed, right? Now, the crash situation might vary. This one might be lower or higher. This one would be lower or higher compared to this or this. And this one might be lower or higher compared to this and this. It doesn't matter. The only thing matters is exaggerated moves. So whenever you see that the number of exaggerated moves, that means which is going beyond 2 standard deviation, 3 standard deviation down, you know that that's what counts. So when you see here, if you are a right trader looking for a high probability setup, you are not going to buy here. Okay, you're also not going to buy here. But when this happens, when the third exaggerated move happens, okay, and you see this candle is retraced back, that means it has came down here and it has retraced back. Okay, load up your gun and fire it. You will, in 99% of the cases, you will see that you will get a good mean reversion trade which has trace back to the normal, or even a new trend will begin. Okay, this is the sweet spot, guys. If you know how to deal with it, you can make a ton of money just by exploiting and waiting for this moment. So whenever you see a crash, just look at it in recent past and count it. If this is the first occurrence, don't put your money on it. If this is second occurrence, don't put your money on it. If this is a third occurrence, load up your gun and shoot it. When I say load up your gun and shoot it, that does not mean you use 100% leverage and you just buy it. That's definitely a case, a suicidal case. That means even if little fluctuation happens on the downside further, you will get toasted. The strategy which you use is called pyramiding, right? Pyramiding the position. That means when this started retracing back, you right now you have a capacity to do 20x, 20 times on the leverage, right? So what we're going to do, we're going to only use what we have. That means if I'm placing the order, I'm only going to buy worth of $1,498. I'm not going to touch a leverage. When I see that this candle has came back in the zone, right? This is the zone. I can use 2 to 3 times of my leverage again and increase the position size. Then if I see this is going further, I can increase the leverage. And once it touches the mean, you remove the leverage completely. Okay? When I say completely, that means, let's say if you are 10 times leveraged, that means you book all your 9 times leverage position, right? Let's say if you have $1,000 account, so your position size is $10,000, you sell and a book profit of about $9,000 right here on the mean. And when it starts going up, right, you again load up, okay? And when I say load up, that means it's a 5x leverage, a smaller than what you have booked a profit. So we again added up, let's say a 5x leverage, that means $5,000, and once it hits the upper boundary, you exit your complete 100% position. This is the secret for a mean reversion trade. When market crashes, how you can identify a sweet spot to buy on the crash, when you see a third wave here. You start with, again I'm repeating, on the position sizing is very important. So when you see that position sizing, and this is going to work only at a 99% case, that means there is 1% probability that it goes up and it crushes down further. And we need to have an opportunity to manage that situation. That's why I'm saying be cautious. Don't get toasted on 1%. Otherwise, you will not be able to utilize the benefit of 99% of the times, right? So if we look at it, that this is going down, and this has reversed back, and this is the third move. First move, exaggerated beyond the limit. Second move, exaggerated beyond the 2 standard deviation, and third one again beyond it. And you see a reversal, right? Especially you understand that this is the sweet spot to buy. Once it comes inside the particular bar, you load up about 1x position, Then you see a good close, you load up about 2 to 3x position. When you see this particular touching it, you remove your leverage completely, just stay at 1x. If it goes up further, which most of the time it is gonna do, once it goes further up, in that case, you just simply book your all profit. This can by itself give you 20% return easily with the leverage, obviously, right? So that's all, guys, for today. Let's have a quick look of our P&L chart, and we'll see where we are on our target of 3,000% return. Right, guys, so here is our P&L analysis. If you see, we have about 3 days in the journey. So this is the third day, and this is only going to tell you about yesterday's profit. It does not shows you today's profit. So that's why what we have done today, about $200 profit, we will not be able to see that. So I'll show you those things on tomorrow's video. Let's look at it how it looks like today, right? So our first day of the Alpha Crypto Trader setup, we had about 7% profit. The second day, we had about 65% profit, out of which, when I was making the video, we captured about 44% of the profit, and the remaining 20% happened after it. So the buy total is about 65% of the profit. And then after that, you see where our portfolio lies is somewhere about here. Okay, so that's our cumulative. That's our cumulative return on last 3 days of last 2 days. Sorry, of it. Once we get the data, this will even look much better. So we'll show you something tomorrow just to understand how this particular view looks like. Let's calculate our P&L on today, right? So yesterday, when I closed my review, I was up about $1,300 account, right? So when we closed our review and our video, we were about $1,300 dollars worth of account, and then we have today about 1,498. So let's say $1,500 worth of accounts, which is about $200 growth, and on top of 1,300, that means about 15% gain. So today's market, the day 3, we made a profit of about 15%, and we'll get a better number on the cumulative returns once it is published tomorrow. All right. That's all for today. I hope you guys are eating healthy and keeping staying safe and keeping well. Please let us know if you have any questions, if you have any comments, or if you want me to make a video on any of the setups. Yesterday's video, I have showed you a Doge short setup. What's the probability looks like. If you have any questions regarding that, you can ask a question and let us know. All right. So thank you so much for your time. I hope you have a good night's sleep, and I hope you care. Bye-bye.